in a move that has sent shockwaves through both the political and financial worlds. United States President Donald Trump has launched a staggering $5 billion lawsuit against JPMorgan Chase, one of America's largest and most influential banks, with a reach that extends across the globe and into nearly every sector of the economy. The lawsuit, filed in a Florida federal court, alleges that the bank and its CEO, Jamie Dimon, unfairly and abruptly closed Trump's accounts in what the president claims was a politically motivated decision designed to damage his reputation and business interests. This isn't just a personal dispute between a president and a bank. It's a high-stakes clash that pits the power of the White House against the might of Wall Street, with the eyes of the nation fixed on the outcome. The case raises big, complex questions that go far beyond the courtroom. Can banks refuse service to clients based on their political beliefs or affiliations? Or does that cross a line into discrimination? Where exactly is the boundary between legitimate risk management and outright discrimination, especially when it comes to high-profile or controversial clients? The timing of this lawsuit is especially notable, coming just days after a very public spat between Trump and Dimon over economic policy and the future direction of the country's financial system. The world is watching closely, as the outcome of this case could set a powerful precedent for how banks treat politically exposed clients, not just in America, but around the globe. For everyday people, the case raises a chilling question. If a bank can debank a sitting or former president, what's to stop them from shutting out ordinary citizens who hold unpopular or controversial views? This lawsuit is about much more than just Trump's accounts. It's about the fundamental issues of fairness, access, and the immense power that banks wield over all of us, regardless of our status or beliefs. The unfolding story of Trump versus JPMorgan Chase is a story that concerns everyone with a bank account, and its outcome could shape the future of banking and personal freedom for years to come.
President Trump's lawsuit accuses JPMorgan Chase of orchestrating a deliberate and targeted campaign to debank him, his family, and the Trump Organization, claiming the motivation was purely political. According to the legal filing, Trump alleges that the bank's actions were not based on any financial mismanagement or risk, but rather on his identity and political views. The suit paints a picture of a powerful financial institution using its influence to punish a former president and his associates, raising questions about fairness and the role of banks in political disputes. The lawsuit specifically claims that CEO Jamie Dimon personally ordered the creation of a blacklist, instructing staff to cut ties with Trump-related accounts. This alleged directive made it extremely difficult for Trump and his businesses to find alternative banking partners, effectively isolating them from the mainstream financial system. Trump's legal team argues that JPMorgan Chase blatantly violated its own anti-discrimination policies, treating him and his organization differently than other clients. They claim the bank's internal guidelines were ignored, and that the decision was based on personal and political animus rather than objective criteria. As a result, Trump alleges he suffered significant reputational harm, with the Trump Organization scrambling to secure new financial partners. The sudden loss of banking relationships, he says, sent shockwaves through his business operations and created uncertainty for employees and stakeholders. The lawsuit seeks a staggering $5 billion in damages. Trump's team argues this amount is not only to compensate for financial losses, but also to punish JPMorgan Chase and send a strong message to other banks that similar actions will not be tolerated in the future. Trump has been vocal in the media, calling the bank's actions not just unfair, but potentially illegal. He has dismissed any regulatory or compliance excuse, insisting that the move was a clear overreach and an attack on his rights. By taking the fight public, Trump ensures the lawsuit remains in the national spotlight. He's framing it as a major political issue, not just a private business dispute, rallying his supporters and drawing attention from both the media and lawmakers. At its core, the allegation is that JP Morgan's move was a calculated political attack on a sitting president, raising broader concerns about the intersection of finance, politics, and personal freedoms in America. Political debanking is when a bank denies services or closes accounts because of someone's political beliefs or activities, not because of financial risk. Imagine an activist group or controversial politician suddenly losing access to banking, not for fraud, but for their views. This practice raises concerns about free speech and equal access to the economy. Without banking, organizations and individuals can't function in modern society. Critics call it financial censorship, banks using their power to silence or marginalize. The debate: should political identity ever affect access to basic financial services? The Trump lawsuit puts this question front and center.
JPMorgan Chase denies any political motivation, calling Trump's lawsuit baseless. The bank insists it doesn't close accounts based on politics or religion, but on risk and compliance. JPMorgan says it must manage legal and regulatory risks, especially with high-profile clients. The bank argues its decision was about protecting itself from potential trouble, not making a political statement. Banks operate under strict regulations and must avoid risky associations. JPMorgan claims it followed established protocols, not CEO opinions or political pressure. The case is now a test of corporate autonomy versus claims of discrimination.
Banks like JPMorgan operate under intense regulatory scrutiny with strict rules to prevent financial crimes.
Regulations require banks to vet clients, especially politically exposed persons like presidents, due to higher risks.
High-profile clients mean higher compliance costs and reputational risks.
Banks must weigh the value of a client against potential legal and public fallout.
The standard of reputational risk is controversial. Critics say it's vague and open to abuse.
Account closures often result from complex risk assessments, not single decisions.
JPMorgan will argue its actions were business-driven, not political. The Trump JPMorgan lawsuit is part of a broader trend of legal challenges over political debanking.
The Trump administration has accused multiple banks, including Bank of America and Capital One, of targeting conservatives.
Several lawsuits allege a systemic problem, not just isolated incidents.
Federal regulators are now scrutinizing banks' account closure policies.
In 2025, JPMorgan confirmed it was cooperating with government inquiries into debanking practices.
The Office of the Comptroller of the Currency is also investigating, adding pressure on banks.
This is about more than one lawsuit. It's a fight over the role of corporations in society.
The Trump camp argues banks should be neutral, not ideological gatekeepers.
Political debanking isn't limited to politics. Banks have cut off entire industries based on reputational risk and ESG goals.
Fossil fuel companies, firearms manufacturers, and even crypto businesses have faced banking restrictions.
Banks cite environmental, social, and governance standards to justify these decisions.
A government report confirmed major banks restricted services to oil and gas firms between 2020 and 2023. Other industries like tobacco and crypto have also struggled to access banking. The central question: where does a bank's right to set standards end and its obligation to provide fair access begin?
These decisions have real-world consequences for entire sectors. The Trump JPMorgan lawsuit is fueled by personal friction between President Trump and CEO Jamie Dimon.
This is more than a business dispute. It's a clash of two powerful personalities.
Just before the lawsuit, Trump proposed a cap on credit card interest rates, which Dimon publicly condemned.
Dimon called the idea an economic disaster at Davos, deepening the rift.
The timing of the lawsuit suggests it may be partly retaliatory.
Trump positions himself as a populist fighting Wall Street elites, while Dimon defends market principles.
Their public feud highlights the tension between political goals and economic realities.
This battle will play out in both the courtroom and the court of public opinion.
Trump's $5 billion lawsuit against JPMorgan Chase is more than just a high-profile legal fight. It's a pivotal test of the boundaries between finance, politics, and freedom in America. This case isn't only about two powerful names clashing in court. It's about the rules that govern how our financial system interacts with our democracy and what rights everyday people have when it comes to accessing essential banking services. The outcome could set a precedent that affects everyone. Can banks deny service for political reasons, or must they remain neutral, serving all customers regardless of their beliefs or affiliations? This question goes beyond politics. It touches on the core of fairness and equal treatment in our society. If Trump wins, new rules could ban political debanking, protecting free speech and ensuring that no one is excluded from the financial system for their views. But it could also limit banks' autonomy to make decisions about who they do business with, raising questions about private rights versus public good. If JPMorgan wins, banks keep control over their client lists, but critics warn this could open the door to financial censorship, where access to money and services depends on your opinions, creating a two-tiered system that divides society. The case forces us to confront a fundamental question. How do we balance the rights of private companies with the need for fair, equal access to essential services that everyone relies on, from families to small businesses? Its resolution will shape the rules of engagement between capital and politics for years to come, influencing not just banks and politicians, but every American who depends on the financial system to live, work, and thrive. This is about fairness, power, and the kind of society we want to build. One where everyone has a fair shot and no one is left out because of their beliefs. The Trump JPMorgan case matters to everyone who depends on the financial system, because in the end, that's all of us.